Hi guys, Zoeb here, One Glance Trader, and in today's video I'm going to show you 4 different ways that you can trade pin bars using the price action indicator that I've created. So as you can see here, what I've got on my screen here, this notepad file, I'm going to talk about 4 different ways that you can use to trade pin bars. Now normally pin bars are used as a reversal signal. So as you can see, 3 out of the 4 are reversal signals, but one of them is actually a continuation of the trend. So what we're going to do, we're going to start with the first one, which is the moving average pullback. Now, what this means is that you're in a trend, however strong, whichever period of moving average you're gonna use, and I'll show you the ones that I use. When price starts to pull back from that trend, touches a moving average, and then jumps back up and continues in that trend. So what we're effectively looking at, we are looking at a pin bar to form at the bottom of the pullback while price is rejecting a moving average. So that's the plan of how you trade that strategy. So what I'm going to do is I'm going to show you an example of that. And the chart you're seeing now is a weekly Euro USD. And for those who aren't familiar with the indicator, I've got videos which I'll link to kind of go into what the indicator is showing, but just to show you the settings that I've got for this particular example is I've put 0 in terms of the range of the pin bar for its check to go back. So this is normally set to 4. So what it's saying is that the pin bar should be greater than the previous 4 candles. But I've taken this off for illustration purposes to show it, and I don't think it's that relevant to have 4 candles back, bigger than 4 candles back rather, in an MA continuation, as well as the minimum number of bars price last went to, because if we're doing a continuation of the trend, you would expect that number not to be very high because price would have touched it some while ago because you are in a downtrend. So again, if none of these actually make sense to you, my suggestion is to go watch the other videos, and I will touch upon it again in later on in this video when I look at the other methods on how to do it. So what I want to draw your attention to is this pin bar over here which says 36. So what this is saying is that price, the top range of this rejection wick, last time price was at that area was 36 bars ago, which I would assume is probably this bar over here. So yeah, 35, 36, yeah, so that bar there, last time price was there. So that's why, it's not very far, even though this is weeks and this is 36 weeks, but which is what, nearly just over half a year. As you can see, because we're doing a continuation, you're not going to get big numbers over here, roughly. So so the way that you trade this strategy, in my view, is quite simple. So I've got 3 moving averages on my chart. So this is the red, white, and blue. So we've got the red one, which is the fast moving average. In this case, is 20 period. Then you've got the medium moving average, which is 50, and you've got the long-term moving average, which is 100. You could use any 3 numbers, really, to be honest. I've just used these because they're quite standard, used by a lot of people, used by a lot of hedge funds, especially the 100 and 200 period. So I've just gone with that. So as you can see, we are in a downtrend. Goes down to the downtrend, pulls back to here, kind of a rejection over here, and we do actually get another pin bar rejecting the 50 period moving average, and price then continues to go down, but doesn't really make a kind of lower low to a certain extent, and then comes back up, passes the fast, the medium, and then nicely now touches the 100 period moving average, and then sells off again roughly about the same level. So you could even argue that that is a nice support area, so to speak, over there, right about here. Very strong, a strong support level. So why is this pin bar useful, a good indication that price was going to hit off over here. So there's a couple of reasons. So the first reason being that it touches the price is rejecting a significant moving average, in this case the 100 paired moving average. The second reason is that you still have all three moving averages intact in the right order. So when I say the right order to kind of determine the trend, you've got it slow, medium, fast. Where you can see here it gets all tangled up, but to see a clear direction of that trend staying intact is that you've got the short, medium and long-term moving average still there in the right order. So that is point 2. And point 3, which is again another one of the 4 different methods, is support and resistance. So if I draw a line about here, you can see, again, remember support and resistance are just zones. So you can see here you got one touch here, which is a pin bar. This one here, okay, would have been classified as a pin bar, but the body is greater than a third of the candle. This is a pin bar and this is a pin bar. So we've got 3 touches here to show that this is a significant level here for price then to sell off. And then lastly is that price closed quite convincingly below the pin bar candle, therefore selling off there. And again, I know this is a weekly chart, so even if you looked at that there, it's 1,000 pips, but if you just did, I don't think anyone will probably have a 300 pip stop, but at 1% of your bank, you can easily make 2 to 1, or you've easily made 3, 4 to 1 there. So that's just an example. Again, these illustration purposes, this one would have also been a nice one, but then again, the support resistance, you've got 1, 2, 3, 4 touches there. Again, it just made sense there that there. So currently prices, around here, I think we will hit some support area around that figure down there. So I hope that makes sense. So this is again using pin bars as a continuation of the trend.